I kind of had a lot going on, and I didn't have much time in the pre-market. But
Okay.
I did look at the higher time frame on the SPY. Let me just pull that up. There are some days when I pay attention to the SPY, and some days I just ignore it. But oh yeah, okay. So here we go. All right, I see it now. Yeah, so basically on the SPY, um, I didn't see anything that I felt I needed to pay attention to, but in general, I felt it was weak because I have an uptrend line.
Mhm.
Let me just share this. Hold on. Okay, I'm gonna send it to both of you.
Okay. Yes. Yep, that's exactly what I had too.
Is that what you, okay. So
Yep.
basically, just in general, I wasn't really paying attention to it, but it was bearish to me because we pulled back, we broke a second time, we pulled back, and
Mm.
then later returned. So yeah, I was getting stronger, but I kind of expected that. I didn't really that doesn't influence me because unless it started breaking and holding above the swing highs on the higher time frame.
Mhm.
Hold on one second. I didn't send it to Peter yet. You still there, Peter?
I'm here.
Okay. I just sent it to you too. But
Okay, thank you.
yeah, so basically all it tells me is like, okay, there's a current here that might help bears. Now that doesn't mean that we won't get a bounce on the open because we were on the SPY we were oversold, I think,
Mm.
going into the open,
Yes.
right? Yeah.
Yep.
So in a way I'm like I hate the mornings where there's a direction like, we're opening weak, but it's not at a key level to take an entry. So
Mm.
as we go into the open, we're weak. I want to be short, but based on the SPY, I'd rather have a pop. And then I'm looking at something like, Disney, and I'm thinking, okay, it could hold. And there was support lower on the SPY. However, the more important line for me is that higher time frame, uptrend line that we cracked, and then we
Mm.
tested again today, almost
Right.
perfectly. So I didn't really look at it, but my theory is like if I can see this same overall pattern across all the stock charts that I look at in the
Mhm.
morning. So I have a general sense. And in the back of my mind, I looked at the SPY like last night. So I kind of this is the picture I had in my mind. So I don't really need to look at it unless something big was happening in the market. But it seemed kind of slow today. Does that make
So
sense?
it does. One question for you, Scott. So one kind of like soft rule that I've started to implement lately is in the first like 5 or 10 minutes, I'm hesitant to flip bias because that's a really common time for these lines to swipe and then just continue on like nothing happened.
Yes.
Yeah. So is that something you look out for as well? Like flipping long to short or short to long or in those first few minutes after the market opens just because of those swipes?
Right. Well, okay. So my belief on that is that flipping, just like other things that happen in the market, um, is cyclical. So you haven't seen me done a lot of flips. Like I don't know if you remember in the past, but there are times when I did a lot of flipping. And my
Mm.
opinion is when the market is very directional and You're getting good liquidity, good volume, good range. Um, you you can, or I believe I can, um, flip with more conviction. But the type of market we're in now, in my opinion, is it's kind of slow and choppy.
Mm,
So I haven't been doing a lot of flipping. And so in other words, I will flip, but I like to let it um uh prove to me on the lower time frame that I should be flipping direction. So what does that mean? It means, okay, I break a level and then you see it pull back on the lower time frame, stop, and then maybe make a couple lower highs before I flip from long to short, something like that.
okay.
Um, so I'm very careful. So like with Disney, all I did was like on the open, I'm like, okay, it might support here. I'll try small fantasy orders and see what happened. And I left a stop and then I got stopped out. So I lost a quarter R. Um, and then, I was watching the rest of the market. I didn't look at the SPY like you said, but I looked at, I'm looking at other stocks. And to me, it was setting up for like a bounce, lose momentum around 11, and then things might roll over. So I applied that to Disney, came back to it, and that's when I started, getting short on Disney.
Okay.
I don't know.
So
I don't know if I answered your question directly.
no, no, you did. And I guess I'll just go to an example that Peter and I were talking about from today. So on Starbucks,
Hmm.
and I'll just give you a second to pull up that higher time frame chart. But we were watching the 110 support area on the higher time frame for a long or short. Um, and I had a fantasy long fill on that right before the market opened, right around 110.
Hmm.
And it was just an example where I think in the past I would have flipped short as soon as that support broke. And with the context of there not being much support underneath that level until like around the 107 area.
Yep.
But I've just kind of gotten scared of doing that because of how many times you get a swipe like that in the first few minutes, and then you're in a position where you've stopped out of a long, now you're in short, and it's going against you where your original thesis was correct. And then the psychological aspects start to come into play where now you're 0 for 2, and your original idea was the right one. And then, I've been in positions where then I start to add to the short, and in the back of my head, I'm thinking, okay, this is a long, and I'm on the wrong side of this, and I just kind of got a little unlucky with the swipe at the open. So
Yes.
I had that long order out today, and instead of flipping short there, I just stopped out, and I left a short order back up near 110, which never filled. But I'm just kind of unclear on the optimal situations to flip short that soon after the bell.
Yeah, it's very tricky. Trading the open is different than the rest of the day. It can be very volatile, and also a lot of times it's irrational.
Mm,
It'll swipe. I need to feel comfortable on where I'm risking to. So, like in this example, that 110 level, I really like. However, it hit it yesterday. We're going into open, with the context of the SPY as we looked at, it's still multiple breaks on that uptrend line. So, the market's kind of bearish.
right.
So that would lean me maybe in favor of considering a short or flipping. So the way I might do something like this is I'll just put a fantasy long near 110, small order, and and maybe a stop some reasonable amount below it, and it's really just for an alert more than anything else.
Right. Right.
Um So, but I'd be ready psychologically for either way. Now on this one, maybe I would have flipped short, right off the bat, but I have to have realistic risk, and for me, I'd have to risk all the way above 112 on the U.
Right.
So nothing wrong with that. That's kind of wide. And then what I would hope for is that if we do bounce up after I get short, it on the lower time frame, it'll make like a lower swing high, and now I can risk over that. So
Mm.
to answer your question, it depends on the context. You really have to think about everything. But um, on the open, I'll probably be wide, and then after that, if it just sails through, and after a few minutes, I think, okay, it is a short, and and then I pay attention to other stocks more so than the indexes usually. But if I saw something on the lower time frame where I could tighten my risk, I would do it. But unfortunately, on Starbucks, there isn't really a good risk level until about 11 o'clock, um, where you got to pull back, and then it started, chopping a little bit, and there was a swing high there, a double swing
Mm.
high
Yeah.
that I could have. I might even say a triple if you count the swing low before that, but where I might be able to risk like to 108.50 and
Right.
try to do one of my tight risk ads, and then shoot for the either 107 or 106 where the higher time frame uptrend line is. Um, and that's another way to expand your size and but keep your risk under control, because if I'm going to do a tight risk ad there, I'm probably only going to risk maybe, I don't know, a quarter or a half if I'm really aggressive, but maybe a quarter R, and it doesn't sound like much, but the size is much bigger because we're talking about a very tight, stop, and we're dealing on the lower time frame now.
Right. And in that case, you would just be stopping out of the tight risk ad.
Yeah, just that.
Right.
Just
Okay.
yeah, just that. And then if I wanted the rest run, I'd probably just let it run. Um, but yeah, I would do that. I'm always thinking about how much I'm risking, and then looking at the chart, and do I feel comfortable with that? But that's the only place I think realistically that I would have tried to add. If you didn't get this short right on the open, which I'd have to risk wide, right?
Mhm.
If I did plan on the short, and let's say I got in somewhere over 109.50, I mean, that's over 2 points. And am I going to get 4 points reward on this? Maybe, but probably not.
Right. Not likely.
So there's not much I can do. And I did look at this real quick in the morning, and I was thinking about this stuff, and I just decided to pass on Starbucks. But I think that tight risk ad is really the only way I could save this trade as far as profitability is concerned.
And when you talked about, so you're starting with your risk wide over the 112 area. Say you filled a fantasy long and then flipped under that support, and you're risking wide at first. And then you mentioned moving that stop down from 112 wherever there was a swing high on the lower time frame.
Right.
Uh, are you envisioning an ad in that situation and then moving your stop down after you add after a swing high is formed, or is there no ad there? You're just trying to tighten up your risk on your fantasy order.
Um okay, two things. I mean, on my original trade, I'm wide. I'm moving down the risk at some point, where it
Right.
makes sense on the chart or based on time of day, via my trading clock. That's one. Um, s- So you're not talking about the ad, you're just talking about the original order?
Yeah, just the original order.
Yeah, I mean, there's not much I can do because for me, I need a trend line or a swing high or a horizontal level. That's just how I do it. That's how I trade. So, um, at best, what I could do is like when we flushed on the open, and then it kind of hesitated, then it rolled over like before 10 o'clock, like it broke 108.38 or whatever it is.
Mm,
Right there, I probably would not have moved my stop down to like 108.50 or 109. I wouldn't do that yet. So at best, what I do is move my stop back over the around 110. So now my risk would be 110. Hopefully my entry wouldn't be too far from that. So now I have a very low risk original trade, but
okay,
it's small size because I was wide.
right.
So when I'm in these situations, I'm like, okay, I gotta look for a tight risk ad, and you can't get crazy with those. You have to wait for the trade to come to you. So, and I don't have a lot of confidence in lower time frame trades. So, it's unusual for me to risk a full R on those. So, yeah, I'm thinking, okay, let's see if anything happens later. I usually cut myself off by 12. Um, and see if if the lower time frame sets up in such a way where I feel comfortable, doing a tight risk ad.
Okay.
Um, so does that make sense?
Yeah, yeah, absolutely. There was one more that we were discussing, which was hymns, and I posted this higher time frame chart in the watch list, but I'm just gonna send it over to you.
Oh, okay.
Send it over to you now. So I guess the questions would be whether this was a breakdown that you would be interested in shorting, and exactly, what where you think would be the optimal points to size in if you were looking for a breakdown pullback. And another thing was that it broke down, it broke the uptrend line at the open, but it did hold a swing low from it was like a couple weeks ago around 36. I think it was 2 weeks ago on Tuesday. So is that something that you're considering as well when you think about a breakdown pullback, a swing low not being taken out?
Let's see. So your idea, did you trade it?
I did, yes.
Okay. Yeah.
Yeah.
So, no, I like this. Let me just see here. I didn't look at it this morning, but all right.
And
Yes.
I
So
treated it as a
s-
breakdown pullback, but I
def-
just wasn't sure.
definitely,
I thought it was
definitely.
stretched down going into the break, so and there wasn't really a great spot. Um, there wasn't really a great point of resistance to size in at. I felt like, so I just wasn't
No.
really sure what was optimal there.
Yeah, again, I mean, probably would have put a fantasy order like in the pre-market. I'd be thinking, oh, it is a nice pattern, and it was broken. It broke the uptrend line. But it was stretched down into the open, and then we did naturally get a natural reaction, a pop, into the open. So I probably would have stuck a fantasy near 38.
Hmm.
And but ideally, like the first really good level, um, to put any kind of size on is not until 39 because of the horizontal
Yeah.
resistance from those two swing lows.
Yep.
And heck, it could, I mean, opens are crazy. So it could go all the way back up to the downtrend line too at 40.50. So most likely I wouldn't be going full size at 39, unless the lower time frame kind of lined up and showed me that, okay, this is probably the level. So
Right.
the way I probably would have done this is I would have had a fantasy. Now, once we got to 11 o'clock though, and we were holding under um, that former uptrend line, so we're doing a
Mhm.
trend line tag. I might have for me. That's a perfect place, right around 38, 38.05 in that area. Like that's a perfect place to try one of those tight risk ads. So to save this trade in terms of profitability, I might have tried to go in there around 11 or so and then just risk. I probably, pick a little bit over the former uptrend line, maybe like 38.30 or so. Um, so maybe I'd risk 30 cents and then I would try to hold that for 36, 35 or lower.
Mhm.
And do it that way. And that might have salvaged the trade as far as not being a tiny trade for me.
Okay. Okay. So, but this isn't an example of one where you would have been interested in flipping short on that original uptrend line break on the higher time frame right at the open,
Um oh,
presumably
wait, wait.
because of the stretch.
Were you long first?
I was long. Yeah, I was
Oh,
long in the
okay.
pre-market around 37.20 right at that uptrend line. And then I just, instead of flipping short there, kind of like what I was saying before, I just stopped out.
Oh, wait a
Um,
minute. I think my uptrend line's different than yours. Hold
yeah,
on.
I think you're using an uptrend line starting on Tuesday of this week, and mine was from
Yes.
Tuesday of the week before.
Yes. Okay.
Yeah,
Wait a minute. Let's see.
I put together what you were doing when you because when you were saying 38.05, I figured you were just using the
Yeah.
the last 2 days of price action there. But
Um,
mine was the swing low around 36 from the Tuesday before.
I see it. Yeah. The only problem I have um with that is on the very higher time frame. I already had a horizontal level from I'm on the 6 hour chart now and I'm going back to November.
Okay.
And there's a very distinct to me horizontal level around 35.50 or so.
Yep, I see
Um
that.
so I put preference on that first
Okay.
over the trend line you drew because
Okay.
to me it's more important. Now we bounced off of that. So I'm less inclined to draw the trend line that you have there. Um trying to figure out a way to articulate this.
Well,
Um
you're long biased until that horizontal support breaks.
yeah, however, we already tested that level and back on day was that? Because I think I traded that day. February 25th. And then
Yes.
we came up and we chopped around a horizontal level like somewhere around 45. And then we formed this I call it a triangle pattern starting from Tuesday. And I for today, if I want to get short thinking that that horizontal level on the higher time frame is going to break, then I'm going to be more focused on the trend line I drew rather than the trend line you drew.
Gotcha.
Also, if you try to draw what you have, yeah, the other problem I have is like when I draw your trend line, now your chart looks. Oh, I see. You adjusted your trend line angle looks different than mine, but when I snap a line off the lows, the former two lows, um it doesn't line up with the swing low on Wednesday. So when it doesn't line up like that, I don't trust it as much.
So you're saying since the uptrend line is below that swing low from yesterday at 37.30, you have less confidence in the uptrend line holding if that swing low is taken out.
Yes.
Okay.
I really put high value on symmetry,
Okay.
and then I'm also paying attention to the time frame higher than this. I'm going to send you my chart to
Yeah,
go
that'd be
through
great.
just so you can see what I mean.
Okay.
Wait a minute.
Could you show, Scott, could you show an example of that higher symmetry you just mentioned?
Yeah, I'll send that too.
Okay, thank you.
I'll send both. Okay. Go. Just one. All right. Um, and Peter, I'll send this to you. Okay. And then the higher, much higher time frame, I'll send that. Where is it? Okay. Just bear with me.
Sure.
So the chart I just sent you, where I marked that little mark,
Yeah.
because that doesn't line up, it bothers me. What I'm thinking is that I should put more weight on a shorter time frame and line up those two swing lows for today's open. And then this next chart I'm going to send, this is just that horizontal level I was talking about. Um, which you could draw a horizontal level off the big swing low on what is it also was that February 25th, yeah.
Yes. Yep.
So, when I'm mapping stuff out, when I'm doing my drawings, like I think about all this stuff. So technically, when you look at the first of the two charts I just sent, when you look at the pre-market, the way the way that I view it is, let's see. Okay, so we were very close to that higher time frame trend line. Let's see. And where'd you get long again?
Uh, I was long at 37.20, so pretty much right on the uptrend line that I drew.
Okay. Now if I was using that I mean that would be the place where I would, try a fantasy long right near there on the open. Um, however, when I look at the uptrend line drawn from the previous swing lows, and then I look at the downtrend line from, I guess, starting on sometime Tuesday.
Yes.
Um, to me, there's symmetry there. It looks like a triangle to me.
Okay.
So I would at the very least I'd be confused. Like, well, what should I be looking at here? Should I be looking at
Right.
this trend line or the higher trend line? So the other thing I think about is like when we go into the open, we know 9 times out of 10 we're going to get a lot of volatility.
Hmm.
So are we going to get volatility down or up? Because we were stretched down in the pre-market, I would think, we're going to get volatility to the upside probably. Um, so I think looking at everything, it's a little bit confusing. But and the other thing is, if I was confused about what to do, I probably would just stay very small, or just pass until
Right.
maybe something, until something becomes more clear later.
Okay.
So I don't know if I helped or made things more confusing, but uh, yeah, my first impression is that if I was looking at this in the pre-market, I think I would be, even though we you had that trend line that you drew there, I would see that we did break this other trend line that I drew
Right.
from Tuesday. So I think I would, because of that, I would be questioning the support off that trend line. So either way, I would definitely be thinking that, even if I tried along, I would be ready to flip short if things
Okay.
lined up the correct way.
And it's also not just that trend line that you're talking about breaking, but also yesterday's low at 37.40 was also broken in the pre-market.
Yeah, that
So I would imagine that's
that
just
was
more evidence for you against the long.
that was broken, and also on the open we did break through I think, on mine we broke through the
It
longer.
did.
Yeah. So I would, because it stretched down, I'd be expecting a bounce. So then I'd be
Right.
thinking, okay, maybe this is a short. Okay, so where can I get short and keep my risk relatively tight to where I can get a good RR if I have a good target.
So Scott, I did end up treating it as a short and treating it as a breakdown pullback. And I'm not sure if I just got lucky here, but is that 38.70 area to you a viable spot to try and size in on a short if you're thinking breakdown pullback here?
Well, it definitely is. I don't know why you chose that specific number, but for me, I probably would be waiting, like on the pullback without seeing anything else. I'd probably be waiting for that former swing low in the pre-market near 39.
Yeah, yeah.
Um, but as I said before, like as we get closer to 11 and then we're staying under my trend line, uh, it doesn't matter, it doesn't matter that I didn't get that top, that execution where you did, because if I can get tight risk there on a small, fractional R trade, then I'll be happy, because if it goes down to target, then it doesn't matter that I didn't get full size higher up, because my risk, um, my RR on the smaller trade would make up for it.
Okay. So let's play out this scenario like you were using my higher time frame uptrend line and you had a similar thesis where it broke down and you want to short a pullback.
Hmm.
Um, Now let's say that you size in, let's say it went up to that 39 area and you size in and it starts to come back down to retest that broken uptrend line. And then let's say hypothetically it bounces off that line instead of breaking it for a second time.
Yes.
What's your thought process in that situation? Is that something that you don't like to see if you're short?
I don't like to see it, but it doesn't change my stop, because like my minimum stop at that point would still be, right where I might have done my tight risk at. So it would be somewhere over 38.05. There's nothing, just like my entries, I plan out my stops in a similar way.
Okay.
That's the minimum in that point. Let me just zoom down. Yeah, I'm on the 7-minute. Let me go to the 2-minute. Yeah, I don't think I would move my stop yet. So yeah, I wouldn't like it. I wouldn't like it, but I don't think I would have moved my stop yet.
Okay. Okay. Just because that's something I noticed happens a lot is especially when there's stretch like in this situation where it'll come back down to retest whatever line was broken,
Yep.
bounce back off of it, and then I'll get stopped out because it maybe just turned out to be a swipe at the open, or for whatever reason came back down and held the original line. But it's just something I've noticed happens fairly often, and can certainly can certainly lead to frustration. Thinking that I should have just cut the trade there when it kind of confirmed what I was seeing originally. But I guess at
Yeah,
a certain point, you have to stick to what you're doing and stick to your thesis.
right. I used to really be influenced by my thoughts and my emotions during the trade
Yeah,
because you can think of all kinds of that. You can go look at another stock or you can look at the SPY. You're like, oh, look, the SPY's getting stronger. I'm sure, like, your mind just goes wild. So I try to just stick to my logical original plan and trade what I see, not what I think.
yeah,
Um, so, and that's the other reason why I trade multiple tickers because I do not like just staring at one chart when I'm in a trade. Um, because the more I stare at it, the more emotional it makes me. I actually don't like to see the price movement. Like I like to look at like I'm in hymns, right? I'm short. I'm like, okay, I look at the chart. I'm not doing anything right now, right? I know where my stop is. So then I go look at my other tickers, click, click, click. I look at tickers on my watch list that I'm not in. And then I come back to it. It'll be 2 to 4 minutes later on hymns. Then I like look at it again. I like taking like mental snapshots. Like this is what I thought
mm,
before, this is what I thought now. Then you got to give it time. I don't watch it like, move tick up, tick down. It just that drives me crazy. So that's
yeah,
another part of it. So usually for me, like I don't usually look at the 1 minute. I'm on the 2-minute minimum. So I need like 2 to 4 minutes before anything changes on the chart. So there's no reason for me to keep staring at it.
right.
Um, so these thoughts that you have, and then watching it, move up and down just one stock. For me, it works against me. So I just like have a thought and like, okay, I'm not doing anything right now. I'll come back to it. So like 2 to 4 minutes later, I'm back on it. Did anything change? Nah, it's still the same. 2 to 4 minutes later, come back. I'm scrolling through charts. I come back. Same thing. Um, and that really helped me when I started doing that.
Yeah, it's like the more time you spend staring at a chart and dissecting every 1 minute bar, the higher the potential is for irrational and illogical thoughts to come into play that throw off a perfectly valid and good trade idea works against you.
Yeah, you can get trapped in the minutia,
Right.
because there is a lot of random movement time frame, just the way it is. So I try not to get sucked into that because I mean it still happens sometimes, but I try my best not to do that.
Scott, this is and I don't want to hold you too long by any means, so whenever you need to jet, feel free. But Peter and I were talking about this yesterday, and it's only I always wanted to ask you, just because I seem to have a real problem with getting to full size and having my full size trades work out for me.
Hmm.
Um, is the idea or the concept of only using fantasy size orders and then scaling your R uh, over time something that you've ever considered, and never not getting full size or even sizing in on trades, but just using fantasy orders, reverse engineering your stops, and then scaling up scaling up your R?
Well, I've tried everything, I think, but no, I used to do all my trades where I would try to get full size on every single one, you know?
Yeah.
Um uh so how can I put this? I think I just when I started using fantasy orders, that resulted from the fact that I used to enter my trades on the fly. In other words, I'd be watching it and I'd be clicking my mouse to get in long or short. I'd be waiting to see something happen on the chart. And after years of doing my chart recaps and reviews, like every day I'd be like, damn, if I just put my order there where I looked in the morning where I wanted to get in, that would have been the perfect entry. Like that happened so many times.
Mm,
Or like I'm not watching the stock and it hits a level and then starts moving and I'm not in it. So it just was an evolution of that became my process, but like it forces me to wait till specific areas to get full size. However, the problem is on the open, as you know, things can go nuts.
right.
So you don't want to get run over. So it's a balance for me of getting in the places that I want to based on the higher time frame analysis I did with technical analysis, but not putting myself in a position where I'm going to lose 1 hour right away off the bat, or more if I'm oversized. So the way I look at it is like there aren't um, a lot of trades where I should be full size every day. So I'm trying to protect myself and then only get full size when everything kind of lines up. It's like I know it when I know it. Now there are sometimes mornings where I wake up and I'll like there's a lot of mornings where there's not a lot of good setups for me.
Yeah.
And then some mornings I'm like, wow, I'm like this looks great, that looks great, and that hasn't happened in a while because the market's just sluggish now. But the point is that I'm trying to be selective. I only want to get full size on trades that I think are going to work or are working. So it's got to be one or the other. But before the open, you really don't know. So if I really want to size in, like I think it's lining up perfect, and I see really tight risk, I will go in and hit it full size. But then I'll put like either a full AS order, stop order, or
Hmm.
a partial, like above a certain level, and where then I'm like, okay, then I got to stop that. I'll give it time and then look again. So I'm not out 1 R.
Right.
Um, so it's a long answer, but it's like uh it's a skill that you develop, I think. Overall, I'm always thinking about where's my entry, where's my stop, how much am I risking, where's my target on every trade. Um, but on the open, you have to be very careful. So most of my trade, like I've written about this in the room, most of my trades are not full size. Like I target, well, I trade, usually up to 10 tickers or more, less
Hmm.
lately because of the market. But I really only care, like I would like to get full size on at least 3 trades. That's my target. And I do that for several reasons. One, if I can get 3 full size trades and I do get at least 2 R, return on those, that's 6 R. That's a lot of money for me.
Right.
I'm happy with that. But the other reason is that by diversifying the trades that I have, I'm less invested. I'm less emotionally invested. My mind is open to more opportunities as the charts develop. It just works better for me that way. Um,
So
yeah, go ahead.
sorry to cut you off, but when you say you only want to get full size on the trades that you think are working or have a good chance of working, is that based on the lower time frame?
No, it's based on both. What I like to see is I like to draw my higher time frame chart structure with the lines.
Yeah.
Then when I look at the lower time frame, either on top Thinkorswim or on DAS, because I only use 2 minutes on DAS. Um, I like to see a pattern or something in agreement that matches with my higher time frame thesis. So if they match up together, then that's magic for me, if that makes sense.
Yes. Yes. So
So,
you're really only getting to full size if you see something on the lower time frame that confirms the reaction you're seeing to your higher time frame lines. Otherwise, you're not interested in sizing in on just based on the higher time frame alone.
well, the majority of the time, yes, but there are higher time frame setups I see. I haven't seen any lately, but there are times when everything is just so beautiful on the higher time frame. I'm just like, screw it. I'm gonna risk 1R on this. But it has
Okay.
to be really nice. Like there's multiple things happening on the daily, on the hourly, on the 15-minute, and the pattern, and just everything. I mean, I could show you examples, but there are times where I'm like, you know what? I'm gonna, I like to stay within 3R losses. So
Mhm.
I'm like, you know what? I got 3R, that I'm gonna use potentially. I'm like, yeah, I'm gonna try 1R on this higher time frame setup only. Um, but it's really got to be good. It can't be iffy or multiple things. Like we're looking at this hymns and like, well, there's one trend line, there's another trend line. It pops up, but it doesn't hit like a horizontal, like it's not perfect. So I'm
Right.
going to be kind of guarded and careful on those type of trades. However, later on, on the trend line I drew on hymns, like when it 11 o'clock came and it kind of like on the lower time frame, it's like touching off that level and holding. I'm like, yeah, that's worth a quarter to a half an R maybe, for a tight risk add on the trade, something like that. But I'm
Mhm.
very, very guarded on just throwing away 1R. I mean, I believe like risk management is number one. I care more about risk management than not making a lot of money today. I don't want to get locked out and not be able to trade, I don't want that to happen.
So in the case where you do decide that everything lines up perfectly on the higher time frame and you decide to risk 1R based on just that alone, not taking into consideration the lower time frame quite yet. Um, are you using a reverse engineered stop on that? Because I wouldn't imagine you'd want to
Yes.
use a really tight stop just based on the higher time frame.
Yes. Uh,
Okay.
if I see the reward there, like, I can see, oh, this target looks like it's definitely achievable today. And there's an easy 3 to 1 RR there or more. Yeah, I'm gonna reverse engineer it. Now sometimes I'll go a little tighter because it's just like you look at the chart and where your reverse engineered stop is like it's pretty far away. So like I'll move it closer, and now I know I have better than 3 to 1. Um,
Okay.
but generally, yeah, that's what I do. I look because I'm happy at 3 to 1 or
Right.
more. And also I let my trades run. So like if my T1, my first target gets hit and it's at 3 to 1 or better, and there's momentum and it's going to keep going. Like I'm usually only out half, I'm only covering half at first. And then if there's more potential there, then I'll just tighten my stop and let it run, so there's always a chance for better than 3 to 1. But on the higher time frame, I tend to be, using the higher time frame for my risk. So it's a little wide sometimes.
Got it. Got it. Um, and I'm just looking at your short on MSTR.
Mhm.
Um, would you mind just kind of providing an idea of what you were thinking about on that one? Just because I looked at it when I saw your post, but I didn't take it just because I was a little worried about a swipe of that support and then coming back up, which it ended up doing. But it looks like you, just looking at your reactions or your executions now, it looks like you ended up doing okay on it.
Yeah, so my thought was, as I posted early, on the higher time frame, like we broke a uptrend line, right? And then it looked like we could break that horizontal level on the open. But as you know, the problem is when you're stretched down and we're on the open and it swipes down, it can very easily reverse back the other way.
Right.
So my thought was, okay, this is interesting. It's not an ideal entry. Like I don't like breakout trades unless they're a certain way. So I'm like, okay, I'll put a fantasy long below the horizontal level just to alert me, and then I'll put a stop below that, and it's just for the alert, you know. So it swipes and it bounces, and then I'm like, okay, I'll take a token short. It's a very small short. It's just to keep it on my DAS position list,
Hmm.
right? And then I'm going to give it time and just see how it develops. So then it starts reversing, and the next level I'm interested in is the former, uptrend line that was broken. So um, I'm doing this by memory. Let me pull up the chart.
I have a question about the same chart when you get a chance, Scott.
Yeah, sure, no problem. So you can't see it on my execution chart, but right where there's like a little horizontal level lines up with the former uptrend line. So I went in there and I put a fantasy order, and then it rejected right away. This is at what time is that? This is like a little before 10 o'clock, I guess.
Hmm.
Um, and then I'm like, oh, you know what? This might hold. This might be the level. So I go in, I do some ads, but I'm still gonna keep my both my R risk and my stop very tight because it's still before 10 o'clock, and I also pay attention to my trading clock. And on the higher time frame, there's a really important level up at yeah, around 320. There's a horizontal
Yes.
level I had identified. Well, yes, yesterday's high basically.
Yes.
So I went in, I risked half an R there, and then I put a stop right over the high. I wound up losing less than a half an R. It was, I don't know, 38 or something. Um, and then the momentum carried it higher. So then the next level I'm interested in is not until the 320 area, and that's where I put another fantasy order. Now I saw on that fantasy order, I figure the first target is back at that the lower time frame horizontal level around 309, and my fantasy is at 320. So I priced that fantasy with 3 points, and I only risked, I think, 0.15. So it's a very, it's a still small, it's a small fantasy. And because of the way the market was trading, I decided um, I'm just going to wait for backside. You can stop me anytime if you have questions. Now, is it okay? Well, you don't see it on the chart, the last execution chart I posted, but I had an uptrend line drawn on the 2 minute, which put me on backside. It's not on there, but if I connect the two lows from the open and then 10 o'clock, it puts me, if that lower time frame trend line breaks, it puts me on backside, in my opinion, at 315 and change. So that's why you see I left a fantasy long a little below that. And then
Hmm.
you see me get in right away. Now I'm sized for high of day. On now, what time is that? That is can't see it. Wait, it's before 11 o'clock.
Right.
Yeah, it's a little bit before 11 o'clock. So you see a fantasy exit hit, and then within 2 minutes after that, you see me size in. Now I'm increasing my size, and I'm moving up closer to an R right there,
Okay.
and I'm pulling my stop a little bit over high a day at this point. And then I stuck out another fantasy order that you see execute, which executed somewhere right around 11 o'clock. And here I'm fully 1R right
Okay.
there. And then does everything make sense so far?
Yes. Yes.
So then the next thing I do is I'm like, okay, I got my stop over high a day, and there's nothing for me to do according to the chart until something else happens. So you see where I drew that little horizontal line from the left there on the lower time.
Yes.
So that is off the low at 312.44. So I just stick a small fantasy exit there just to alert me, because that's the next area that I'm interested in. So it hits and I'm like, okay. And then I recycled that and then added just a little bit, because now my stop is exactly right over the high of day. Like there's not even a margin there. So I just add enough to where if it goes back to the high of day, I'm going to lose 1R.
Okay.
And then on the way down, the next two are just basically fantasy exits. They're probably 0.10 in size, and they're just at key levels to the left there. I just want to know. I decided not to add anymore. I was happy with the 1R. And then you see me. I don't cover any size. I'm a little bit over half out when it gets down to whatever price that is. What is that? Around well below 300, like 290, 299, 298 in that area. So does that make sense?
It does. I guess my only question would be when you stopped out over that 308, where the trend line tag area was. How do you decide in a spot like that whether to stop out of your entire position or just to cut size? Because I've seen you do both.
Um, Sometimes I will cut size. I judge it by the distance between the next level. I
Okay.
judge I judge it by the impact of that stop. Like, okay, so I believe because it did kind of have a hard pull on the lower time frame after it smacked that level. I just figured if it takes that high out, it's probably going to cause some kind of squeeze.
Okay.
It's just a judgment. The other thing I'm looking at is I now, after it made that swing low, I thought about this like prior to the stop. It formed that swing low at 10 o'clock.
Yes.
Um, so I snapped an uptrend line on those two lows on the lower time frame. So I'm thinking now I have an uptrend line. I think that level might cause a squeeze, and there's another big level, the one I really want up near 320. And I'm thinking about the other stocks that I'm watching, and it seemed like at that time most of them were trending up. So it's a judgment call. It's like there's no like simple formula. It's just like I think about all these factors: time of day, the way the lower time frame chart looks, when I drew that new uptrend line, when I look at other charts I'm looking at, in the market, and I just decided, now this isn't a cut size. This is a get out and then wait.
Right.
That's
Okay.
all.
Because you're thinking now the likelihood is very high that it just goes right up to that 320 resistance. And what's the point of hanging on to some of that position if that's what you're expecting?
Yeah, and the other thing too that I was thinking about is on the higher time frame. Um, that entry that you see with the fantasy off that level, the what level is that? Around 308. That also perfectly lines up with the former uptrend line. There's an uptrend line that's you don't see here, but there's an uptrend line on my higher time frame chart drawn off the low of Tuesday and Wednesday.
Yes.
So
Yes.
I'm thinking about that too. I'm like, wow, this is an important level. So if it breaks this swing high, which I got that level from a former swing high, and that dotted line, that means that it was we're closed at. So it's the previous close level.
Right.
And it's now it smacked my higher time frame trend line, came down, now it's over it. So I'm like, I think about that stuff. I'm like, nah, I don't I want to wait. I want to get out and just wait because I think there's a high chance it might go to my next level. My next level wasn't until 320.
Okay. That
And
makes sense.
then when it finally hits 320, I'm like, okay, well now I want to see like clear backside before I really commit full size to this trade. So I'm making all these decisions, one after another, and that's the stuff I think about. It's like what's happening on the higher time frame? What do I see on the lower time frame? Has anything changed now? And I'm doing this in snapshots. So like, I come to this chart and I look at it, I'm like, okay, this is what I'm going to do. Then I go on to other charts, right? And then I come back and I look at it again and I remember what I thought about last time. I'm like, all right, has anything changed? No, and then if an order executes, then I'm like, okay, what do I do next? Do I put out a stop or a fantasy exit, or at what place do I want to add? I'm just making these decisions step by step.
Okay. Okay, that makes sense.
My question was, Scott, if you said you were not gonna size in until you see the backside of on MSTR,
Hmm.
and when when did you know that it was the backside? When you can say, okay, it's confirmed, now we're on the backside. Was it after
Yeah,
you saw the lower high or when that
let
support crack?
let me show you. I'm gonna just take a snapshot here and send it to both of you because it's not on this chart, but I'm gonna send it to you. Maybe make more sense. Hold on. All right. So let's see if I can draw this right here. So when I say backside, what I mean is I'm looking for patterns and breaks on the lower time frame that agree with my higher time frame structure.
Okay,
So
so you're looking for a pattern or some kind of a trend line or something to break near your higher time frame
yeah, and
downtrend line or horizontal resistance.
now I just sent you the chart. So okay, so this is the 2-minute chart, right? So what happened here is right around see, right around 10:30ish, it hit my major level, that around 320, right? My fantasy order
Okay,
executed. Now at that time, I had this, see the steep uptrend line on the lower time frame?
okay,
That is to me one form of backside on the lower time frame. So if that trend line breaks, that's an indication, okay, this might be backside. So I circled it. So right there, well, a little below that is where you see me add after my fantasy order hit, right? And I'm adding with size at this point. Now after that, I drew 3 slashes. That to me, that's a head and shoulders pattern on the lower time frame.
mm-hmm,
So I didn't know that until closer to 11. But at 11, I'm like, after a turn, I'm like, oh, this looks like a head and shoulders. And then you see the next um, uptrend line I drew off the lows is a little less steep.
okay,
See that? So this is all signs of backside to me. So we broke the steep uptrend line, right? We came down, we went up. Now the lower high didn't go back to 320. To me, that's a type of head and shoulders pattern. So that's another sign of backside. And then the next trend line I drew, you see that it breaks that pretty hard around 11:25 or so. And then you see it uh, pull back after that, hits that line, and then promptly reverses. So these are all telling me hey, we're on backside now. Does that does that make sense to you guys?
Yeah, so it's a combination of basically everything. You're looking for trend lines, support lines, and if you can see any patterns. And the more you have
Yeah,
is the better.
the more the better. Yeah, it doesn't have to be like it hit my major level and then it broke that trend line. Well, that could be backside, by itself as long as we start making, lower lows and lower highs after that. But then I see head and shoulders, then I see another trend line break, then I see a break and bounce and reject. You know what I mean? Like it gets better and better as we go on. So that's what I like to see. It gives me more confidence in the trade.
So would that make sense for a beginner trader like myself to wait for that backside to be visible before I even consider an entry?
Um, the way I would put it is this: I think it's still useful, valid, and helps discipline if you do fantasy orders. But the fantasy orders for beginners should be small. And based on the higher time frame, because in my theory is you don't want to get involved in any trades unless you're at key important higher time frame levels. There will be setups that happen on the lower time frame, but from my experience, they're much less reliable than setups that happen at key higher time frame levels.
Hmm.
So I think fantasy orders are fine, but you can't get carried away. And yes, ideally, what you want to do is wait for some kind of backside, and then you can add, but you still got to kind of have your risk wide if you're, if you wait until it breaks through support, like in this example, and your risk is all the way up at the high of day. It's still you should still leave yourself some room to add on bounces. You know what I mean?
Hmm.
So just be careful that you're not risking too wide if you wait too long to get in on backside. So, you see me, add, I size in when it breaks my steep uptrend line, and then you see me do an add there near back up near where resistance is. And then I add again when it breaks support. Um, so you just got to be careful you don't wait too long and your risk doesn't get too wide, and you can still hit a big RR target if you
Right.
hold on to the trade. That's all.
I wanted to send you a chart because I did have a question about a trade I did. Just give me one moment. Let me send it to you.
Mhm.
This one. So here's the trade that I did on coin.
All right. So let's see. You didn't do anything until like late morning,
Yes,
which is
until
good.
around
And
11.
now well, it's the only entry, but the entry that you had near 225.20, um, was that sitting there previous to that, or was that the first time?
No, what happened was I started watching this um, around 10 o'clock because I had that down trend line, that yellow angled trend line is the down trend line on the higher time frame.
Hmm.
So I wanted to get short near there. I didn't have a
Gotcha.
fantasy order out, so I was just watching it. And then
Just watch.
I wanted to see is I wanted to see the backside form, and the way I kind of identified it is you can see a white line drawn, like the very top white line where that
Hmm.
arrow kind of pointing.
Yep.
I drew that line as I think that was the resistance where it, it kind of moved over there and then kind of almost tagged that downtrend line.
Hmm.
and then it broke below it. Then it went down to the second white line near 223. And then when it was down there, I said, okay, this is kind of looks like a backside because I don't have the trend line drawn, but like you said, how that you
Yeah,
draw the trend line from the low of the day, and then there's another low uh, near 10 o'clock. You connect those two lines, and it kind of matches where that breakdown happened. So the
yeah,
trend line
absolutely.
broke, and then I had that resistance area on the lower time frame drawn. So I said if it comes back to that 225.20 area, that's where I want to get short. And I had my stop just over that downtrend line. So
Gotcha.
so my question regarding this trade was where I had entered, would that be considered as okay, now we're on the backside and now we're just retesting this resistance area?
Yeah, actually, that's for me, that's a perfect entry. Absolutely. I just sent you my chart, and this is how I would have drew the lower time frame uptrend line. So
Hmm.
you have it came up to your resistance, your higher time frame resistance, right? And it cracked that trend line, and then we bounced.
Right.
So for risk reward purposes, I would be perfectly fine entering right where you did, and then after that, even on the net, there was another little squeeze up there, and it tagged my trend line almost perfectly. Um, I would have been fine sizing in there, and I probably would keep my risk either to high day or a little over the higher time frame, downtrend line. Or sometimes I'll do like a tight risk add, like on the lower time frame here, like I was talking about, where maybe I'd throw in another, 0.10 R or up to a quarter R if I wanted to.
Hmm.
But yeah, no, that's perfect. That's exactly. In fact, I don't know if you saw it, but in the questions channel today, I put a little piece there about higher time frame front side and then lower time frame backside.
I haven't read it. I did see it though. I haven't read it.
Yeah, yeah. It's talking about this exact thing.
Okay.
So yeah, no, this is just what I'm talking about.
This is something entering having that order there. I don't know why, but I was explaining to Nick that I'm for some reason I'm having a trouble with those fantasy orders.
Hmm.
I think it's just subconscious or I don't know what it is, but
Oh no, I understand. I even knew I should be doing fantasy order for a long time, and I still had a problem with it. And until I finally started, I finally realized I traded so much better when I pre-plan my entries and then my stop. Like what's it hurt? Like I see a level, I want to get in, I stick my order there, and then I put a stop above it. And if you're really nervous, you can just put your stop to the point where you're not going to lose an R. Maybe you lose whatever you're comfortable with. If you're that nervous, but execution wise, it's just in my opinion, it's just way much better. But psychologically, yeah, for years, even though I knew I should be doing it, I would still want to wait and click the order myself. But 90% of my executions are the order sitting there, and I let the price come to me. I'm not chasing price.
well, it's funny because we were just talking about with Nick is if if you didn't even like I think he mentioned it earlier, if you didn't even use full size or this R system, you would
Hmm.
just use your fantasy orders, and then that would be your this fantasy order would be just 1R, and then which is considerably less amount of risk than what you would risk right now with 1R. But
Yeah,
you would just
you
do that and have a considerably wide risk where you still get 1 to 3, 1 to 4R, and then that's it, and you just walk away and then let it
yeah,
work it out.
let it work, and I mean it's nice to be able to nail like a tight risk entry and go full size, but if you're doing it in a lower time frame and you're not respecting the chart structure on the higher time frame, it's very difficult. The as you guys know, I mean, these stocks have these wild erratic movements, just come out of the blue. Um, so the way I fan what works for me is I'm kind of wide on the higher time frame, and I will when I know when I believe the trade will work or is working, I will carefully look for tight risk ad spots where I'm gonna, you know, the old saying like you should add to winners, cut your losers fast and add to winners. Like,
Hmm.
well, how do you do that? This is the way that works for me. So if I can do some tight risk ads on the lower time frame, but I don't trust the lower time frame that much. That's why I'm not going to risk an R, just on a 1 or 2 minute chart, last swing high. That's very difficult to do.
Now, if you have been watching, for example, this chart, let's say that when I showed you coin, and you have
Hmm.
been watching the chart and you didn't have a fantasy order out, but you knew you were watching the 226 level as a short area possibly, and you were watching the chart, and it gets up to 226, and then you got busy with other things, and then you come back to it, and you see that the backside has already formed,
Yeah.
and then you said that was the perfect entry, and then you would say, okay, backside is here, 226 is rejecting, so this looks good to me, so I'm gonna go in with 1R risking over that high.
Right.
So would that be a trade that you would just go with one bullet and just get it in?
In this example, I might do that because we're not on the open, right? And it's now after 11 when momentum slows, market slows
Mm-hmm.
down. So because of that, your risk is less than near the open.
Right, because
So
there's
we
no
have that
big
higher,
movements.
we have the high a day and we have the downtrend line above it. Um, so yeah, for a beginner, if you're only looking at this one stock and you don't have an order there and see it form right in front of you, yeah, there's nothing wrong with that. That's not
Mm-hmm.
that's not something I can do anyway because I'm looking at a lot of stocks.
Right, right.
But yeah, if it all lines up and it was in, but the important thing is make sure it was pre-planned. You're not just, you thought of this in advance. It's not like something that, you just thought of now. I would stay away from that. But when it broke down and then you thought at that point, like, like now if this bounces, that's where I want to enter on the next bounce
Mm-hmm.
near some kind of lower resistance. Like the next resistance I see to the left is around 225 and a quarter. So right where you got in is like to me perfect.
Mm-hmm. And then I had two more questions, if you have the
Mhm.
time.
Yeah.
The next one I had was on Starbucks, and I just sent you the chart that I drew out.
Okay.
And you guys talked about this earlier, but I just had one question where I was watching the 110 level as an importance area, so I wanted to see that break down and then come back up and retest it, and then I wanted to get short there.
Hmm.
Well, that never happened. So
Right.
then I saw it broke down and it started forming this pennant on the smaller time frame chart.
Hmm.
Is that something that I should just ignore because of the fact that it's just not aligned where my higher time frame entry that I pre-planned is? Or would
Well,
or would you
what
consider using like a like a fantasy order just to put in there for, I don't know, funsies?
what I do is I will, if I'm not in a trade, like it just went without me and I want to enter, and I see something form in the lower time frame, I will do it, but I'm very reluctant to lose an R on that. Because the truth is if you enter there and it moves against you, I mean technically it's still a short all the way back to 110 again. You know what I mean?
Right.
Um so I usually will decide like, okay, I look at everything on the lower time frame and I make a judgment. I'm like, okay, um I'll risk a fractional R, whether that's 0.10, 0.15, a quarter, up to a half. Depends on how confident I am in that trade. Um, and that might not seem like a lot, but if you're on the lower time frame, and like in my example, if you could get in a little over 108 and risk a little over 108.50, 50 cents, you know, there's at least 3 to 1 there to my next target. And it doesn't sound like a lot, but if I'm in for a quarter R, I mean, that's going to be close to an R profit. Like, okay, it is what it is. But I have a hard time risking a full R on these lower time frame trades.
I see. So you would wait for 110 to come back, and because that would be your, how Nick said it, that would be your optimal entry, right?
Yeah, yeah. I mean, that if I wasn't in it, yeah. The other reason is because, again, because I trade multiple tickers. There's probably another stock that is at a key level, key
I
higher
see.
time. So why am I obsessed over, this stock, which is not at a higher time frame key level and just on lower time frame? So, but exceptions to that, like, okay, the market's slow. I don't have a lot of positions on. I just happen to have extra time, uh, not much is going on. Like, yeah, then maybe I'll start looking at some, lower time frame trades. But I try to stick to the higher time frame levels because they have, to me, they have the most likelihood of success to reach big targets, you
I
know
see.
uh just from my experience.
And to have bigger moves within the day.
Bigger moves. More people are more eyeballs are on those levels because you have, longer term traders. Like, I call myself an intraday swing trader. Then you have actual swing traders, they're interested
Hmm.
in those levels, and they're more obvious on the higher time frame, so they just stick out more.
Yeah, and then
So
you have the position traders.
right, you got position traders,
Yeah,
algos, you know what I mean? Like, uh not to say you can't have successful trades on the lower time frame. It's just like, I think you have more odds of success, and you are more odds of a bigger move when it goes your way.
understood. Okay, I just sent you one more chart, and that's gonna be my last question,
Okay.
and that's on mRNA.
Oh yeah, this is a nice breakout pullback.
So I had this chart on Watch this morning, and I did not enter this because I got distracted with other entries, so I was not paying attention to this.
Mm,
Um, and my question was, if you had this on your list and had a fantasy order, how, and let's say you get triggered, so now you have to watch the chart, how would you have traded it? Because I just had a hard time, because then I looked at the chart and I said, okay, this was exactly how I pictured it and how I wanted it to
yeah,
work,
you,
but
you
how
saw it.
I didn't
Yeah,
know
you
where to
saw it.
enter. I couldn't put myself, okay, this is where my entry was. I didn't see it because earlier I mentioned, or we talked about how MSTR rejected, or not MSTR, I'm sorry, Coin rejected the area, or MSTR I think too, rejected the area, and then we saw the backside. So if I kind of reverse engineer that or flip it,
Yep.
now what would be the kind of like in quotations the backside when I'm trying to go long?
Yeah, good
Do
question.
do you see what I mean?
Yep. Let
Okay.
me look.
If I
Okay.
if I'm looking at the chart and I would say, okay, now it pulled back to my area, now it goes up, and then it's pulling back, but I want to have that, how you said it, optimal entry. Where would that be? Because I could not see it.
No, yeah, that's true. The only backside for me, there isn't a symmetrical trend line that I see until after the open, when you form lower highs between 9:45 and 10:45. So there's like an hour there. There's a little downtrend line there on the 2 minute.
Correct.
Um, that that when that breaks, to me that's backside. However,
Mm-hmm.
the because it's late in the day, it's 11 o'clock, and my risk is wide. My true risk. I mean, I could use artificial Titan risk, but I'd have to risk at least to 33, 60, 70 in that area, or on the higher time frame, 33.20. So then I have to look at it and say, okay, well, where's my realistic target? Um, by 12, because I think about 12 because I usually cut myself off around 12. Um, so there might be more than 1 to 1 here, but that's the problem with this particular trade is that I just would have a hard time believing that. I mean, maybe it could, but the volume. Another thing I look at, the volume today is kind of low, and the trading that I see up until that 11 o'clock, downtrend line break on the lower time frame is very choppy. So that plays into my opinion as to how far it can go. So yes, the backside did come, but didn't come until it formed up, late morning. And my risk on this is kind of wide. So you did have backside, but I pass on these trades. Sometimes it's not just how it's set up. It's just like if I don't believe I can get a really good RR on entering late like that. So the only way to really get decent RR would be with fantasy orders on around the open, assuming you trust at that level, somewhere around 33 and a quarter to 33.40,
Mm-hmm.
um but yeah, it's higher time frame. It's a and it's probably a great swing trade. I usually look for entries on swing trades like this because it is a breakout pullback, pulled back under the trend line. And if I look to the left on the lower time frame, there is some support right around the area that it pulled back to. So it's definitely a trade. Now there's a lot of trades like this one that I just decide to pass on. I see them, but I'm like, yeah, I mean, it's choppy. It's RR. I don't think is that good. And you know, if I saw the backside where you saw it, it's like it's kind of wide. So I just might pass on it.
Yeah, that makes a lot of sense because then your entry would have been around 34.25 where your backside is, but you still have to risk like 33.10 maybe. So you're
Yeah,
risking
because
a dollar
right,
to
because
20.
on the 15-minute chart, which I kind of look at 15:30 an hour depending. Yeah, I mean, on the 15-minute chart, that's about where I'd have to risk to. And so then I have to say, okay, well, if I size in on the backside, that's like $1. So I like to go for $3 if I'm risking $1. So do I think it's going to go to 37 and change today? I'm like, I don't know. My opinion would probably be I don't think so. Maybe at best I'll get 2 to 1 out of this. And more likely, somewhere over 1 to 1. So I use that to screen trades out. And even though you will see setups like this, there's a lot of setups I see like this that I just decide to pass on because I just don't believe I can get a good entry, or I think the the risk, the stop versus the target's just not in my favor.
Right, but if you had a fantasy order out, let's say at 33.30 and you got filled in the morning,
Hmm.
and then you're so when you have the fantasy order in at 33.30, could you explain what is your like process on how do you size that in?
Um,
Because
well,
I
I
know every
made a,
stock is different.
yeah, well, I made a fantasy order cheat sheet. I don't know if you saw that, but I put it in forget where I put it, but I answered one of your questions recently.
Okay.
And but anyway, what I do is usually I decide like, okay, this is a fantasy. So what am I doing here? Am I just taking a token fantasy and risking 0.05 or 10? You know, a lot of times I'll just do 0.10. Or do I really like this, setup, and do I want to risk a little more than that? Usually on just plain fantasy, it's not over a quarter of an R.
Mm-hmm.
Also, what I'll do sometimes is like, you see how it pulled um, early in the pre-market, like 8:30. It pulled to that
Right.
whatever it was, 33.20. And then it bounced, right? And then I might be thinking, and it started going over the trend line, right? Back over the trend line. So then sometimes what I do is I'll just put out a tight risk fantasy order. Um, so I might use the swing low from the pre-market, which was 33.20 or whatever it was. And I might stick a fantasy order a little higher than that, like a 33.30, and put a stop just on the fantasy a little below that. And maybe I only risk another zero point 0.10 or zero point 0.15 or whatever it is. It doesn't sound like a lot, but the size can be big because you're real tight. But if that
Mm.
fantasy gets hit and the stop, it's not a big deal. It's like I'm not going to be upset over that. I mean, boom, boom. Like my fantasy hits it and the stop on the fantasy, and I'm out 0.10, 0.15. I'm like, I'm not. The original trade can still work. I can still come out ahead. Maybe there'll be another opportunity, later to do another one. So I'll do that sometimes, but um other than that, I treat my fantasies and my ads different than my main trade, and it's just another way for me to manage risk, but at the same time give myself an opportunity to turn this into a profitable trade.
That makes sense. That makes sense because if you enter at 33.30 with, let's say, a 20-cent stop, which is very generic, no,
Very tight.
very tight, so you have a 20 cents risk. But in this case, even if you're conservatively thinking and your target would be at 34.50, that's a dollar
Hmm.
20.
Right.
So if you're
So you
risking,
can make well over an R on a small
right,
fantasy, and I'm happy with that. Even if it's just a fantasy and I use tight risk and I make an R, I'm not upset over that. I could, you can sit there and go, well, if I was full size there, I could have made a gazillion dollars, but it doesn't matter. I'm more concerned about, I like to lose an R or less, unless I decide on a particular trade I'm using 2R, which is unusual. But I like my losses to be 1R or less, um and I find if I try to wait and I see price come down to the swing low and try to manually enter that and
hmm
put a stop in, like I find that a lot harder than just pre-planning my order. Like to stick my order a little above, put a stop a little below. If I lose a little bit, it's a fractional R. Okay, so what? Um, but a lot of times they work.
like in this case.
Yeah,
Because
yeah, a lot
if
of times.
if I were to try to get into this, I probably would have been where you said, 11 o'clock break, and my risk would have been at 33, 15 or 33.10. But I'm risking a dollar.
Yeah,
With the fantasy order, you can risk 20 cents and then now you're profiting a dollar 20.
exactly.
So you're
That
at,
that that's what I found. That's the reason I use them, because um, it's much more likely you will get stopped out, but the RR is much higher.
mhm.
So to me, it doesn't make sense to be using a full R on these tight risk fantasy orders. And I can have several goes. Like I could see another one later and try it again, and like, okay, I'm gonna do another 0.10, 0.15, and okay, I got stopped again. All right, that's enough. Like, but I'm still not down an R.
Scott, would
Right.
you recommend for someone who's like Peter, who's just getting used to using the fantasy orders, would you recommend attaching a stop to each one that he puts in the pre-market?
I mean, I do. Yeah, I always do it myself. I'm like, uh, if I have an order in and I'm not even watching the chart, then it's mandatory. Like, there's a stop somewhere, even if it's
Okay.
wide. It depends on the situation, what I'm willing to risk. But it's a good practice, and I also have a button for a half stop. In other words, if I think it's going to just get like it's going to wick or get volatile, like I'll put my fantasy order out to enter, and then I'll put a half stop out to exit. That's where you see me cut size.
Yeah.
So either way, just yeah, get used to it. Um, it's a good habit. Now, on in this example, like when they wick down, like it happens really fast. So if I try to do that manually and then put a stop in, like it can get out of hand, and also it makes me nervous doing that.
Yeah,
Like
I
I
agree.
get emotional.
Hmm. Well, tomorrow I will try to use my fantasy orders just like that to see how that works.
Yeah, I mean, if you haven't tried it, I would suggest trying it and only do it to where you feel comfortable with the loss.
Mhm.
Even if it's a small one, just stick the get just try out putting out fantasy orders. When I finally started doing that, it was a real game changer for because my best RR trades are always when these pre-planned orders get hit in advance. I mean, I place the order in advance and they get hit. Um, when I try to do things manually, I'm like inevitably I'm just always chasing a little bit. So it just works better for me.
I don't know if you saw, I think you saw, because I think you commented it too on the trade I did on CRDO
I
today.
saw it, yeah. Yeah, I commented on that.
And my question on that was, and this is why I had struggles with the fantasy order. I put a fantasy order in around 41.50, 41.40. And when that fantasy order hit, I just got, and I'm not talking about size because I'm trading, one share or two shares.
Hmm.
So there's no size there really. But when it hit the fantasy order, emotionally, it just really got to me because what happened was it got hit and immediately started going down. And then in my head, in the back of my head, I was okay with, I knew it was going to go to 40, or I was expecting it to go to 40. I was okay with it going to 39, and probably that's where my final stop would have been on that fantasy order
Hmm.
if we went to 39, because 40 was the level that I was watching. That, between 40 and 41.50, somewhere there, I knew I wanted to get long and I wanted to,
Right.
add. And I don't know if I was overwhelmed or just too emotional when it just quickly started going against me. So, like, I don't know if you had experienced this before or,
Oh yeah.
maybe
No,
15
no.
years ago.
Yeah, yeah. When,
But
when I first started
mhm,
doing it, same reaction because it's foreign to you. Like, um, especially when you're watching the lower time frame. If you were on, here's another thing. When I do when I plan my trades in the morning, I put out all my fantasies. I am purposely mainly just on the higher time frame. So I'm like looking at the hour, the 15-minute, the 7-minute, but on Thinkorswim. I'm not on DAS. I know you don't use DAS, but I'm not on the lower time frame. Um, so but if I was in those, and I remember when I first started doing this, it's very different. It's just a small order. You just got to remember what you thought when you planned out your trade. And you have to realize when your fantasy orders get hit, it can go beyond that. That's normal, but it's a small order, and it's okay if it goes beyond that to a certain degree, to a limit. that you already thought of in advance, which you did. But it's very uncomfortable when you first start doing it. Now I love doing. I love hearing. I get audible alerts when my fantasies get hit, and on the open, sometimes it's like, ding, 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 ding. Like I have multiple fantasy, but I just, you get used to it. You just relax. It's like, okay, they got hit, and it's going a little beyond, where I thought right away, but it's uncomfortable when you first start doing it. That's normal, but you'll get used to it, is all I can say.
Yeah, a few days ago I tried the fantasy orders and I think I had 6 or 7 stocks. 5 minutes
Hmm.
after they open, I was in 6 or 7 stocks. And again, there's no size. It was one share with
Right.
everything.
Small. Yeah.
Just to be in it. And then I was extremely overwhelmed and emotional. I didn't know what to do. I was clicking all over the place and I got to the feeling, to the emotion where I was going on tilt. And then I said, I gotta get out. So then I even told Nick, I said, I'm gonna take a walk because I can't do this. And I just exited everything and I walked away. I'm like, I can't, because I went on tilt before and it was a count
Well,
disaster.
I mean, in your defense, that many stocks when you're not used to that, it is overwhelming. So, what I would recommend in the future is if that happens again, just take a deep breath, zoom out to the higher time frame, and look at the stocks you have, and just decide which ones you're just going to cut. Like it's just a fantasy order, so you're not married to the stock. It could probably move a lot, and you're not going to, because it's just a small order. But psychologically, it's way out of your comfort zone. So that's probably too many stocks. Like if you had two or three, you'd probably be fine. But
Mhm.
but six, when like that's a lot when you first start doing this.
Yeah.
So I completely understand.
And my last question was on this trade on CRDO. When as it was approaching to 40, should have I waited until that confirmation or that backside had appeared, or was that how I was adding in as it just was falling down into that 40 area that I was watching?
Well, sometimes, and this might be one of those examples. Sometimes I will just go ahead and commit, um, with my fantasy to an entry, and you know, I'm not sure, but maybe on this one as an example, maybe I would just do that. But I tend to be a little wide if I'm doing that. But to answer your question, just look at it. Um, Trying to see what kind of. If you were zoomed in on say the 1 minute, like the real lower time frame, or sometimes I use tick charts. I mean, there is backside there. You'd have to be ready for it. But around 9:48, 9:49, there were two swing highs, on the 1 minute, and then it broke above that. I mean, if you weren't full size on this, then that would be like the only place that I probably would consider getting full size. But if I got full size there, I would have to risk, let's see, 41 over $1 to the low a day. So you can do it, but let's see. So one, yeah, I mean, yeah, possible. You'd have to target like 44 or so, for me to, say it's worth it. But you could have. Um, but most likely on this type of trade, if I did this, um, I really do like that level. I did draw out the chart and I saw a couple things that I like near 40. There's a pattern involved in this that I use. But around 40, let's see, what would be my target? My first target, yeah, my first target on the higher time frame would be close to 44. So I probably be risking between a dollar and $1.50 if I decided to size in, full size, just just on the front side using fantasy orders, something like that. It's a little tough, but if I did it, that's probably what I do. I have to be kind of wide on the front side.
I see.
Does that answer it, or
Yes,
yeah?
absolutely, absolutely. Yes, that's
All
where
right.
my target was at 43.50. But SPY started. It looked like SPY was turning. I think it was around 10. When was it? 10. As it was at
Yep.
at 7 a.m. It had that high on SPY, 577.90 area.
Yep.
And then when it got there at 10:10, it looked like it might just turn or flip over. I had that wall build up. So I didn't know what was going to happen. So I put a stop to, I put half my size, put a stop to it on,
Mm.
on CR, on CRDO. And then I messed up the order. So I put it in, I wanted to put it under 42, like 4180 or 4190. But I ended up putting it at 4205. I don't know why. So I got stopped
Okay.
out there, which is fine. But I got stopped out there and then it went to target.
Yep. Then and that's yeah, and that target is yeah, it's a good target. Um. So yeah, it's not terrible, but it happens. I usually, if I know I'm entering the higher time frame level like that, then I try my best not to shoot myself in the foot and get out too early, because then after 10 sometimes you get in the chop, and on the lower time frame it can just wiggle around, and then if you're watching it fake you out, especially if you're afraid to lose profits.
Yes, that
uh,
is still one of the struggles I have.
yeah,
But I
it's
saw what Nick is doing and you guys are doing is that you exit your trade, but not the entire position. You just exit like a fantasy exit, like a tenth of a size or.
yes, that's for me. That other people told me it works for them too, but it works for me. It's psychology, because if I and a lot of times on the fantasy exits, I'm just doing 0.05 R or a tenth, just a small amount, and I just feel like, oh, I took some profit. It just takes some pressure off,
Hmm.
and then I don't have to think about it. It just makes me feel good. But I know I need to hold the bulk of my position to where I'm at 2 to 1, 3 to 1, on my trades, because you have to make up for your wash trades, your small winners, and your losses. So it's not like an option. I have to let these trades run to my higher time frame target, because it's the only way I can maintain consistent profitability over the long run.
I see.
Because it's just very difficult for traders that trade 1 to 1. Like, they have to have a really high win rate, like 80%. And I don't know many traders that are trading with an 80% win rate, if any. So that's why the RR is so important to me.
What would you say your approximate win rate on your fantasy orders are?
Just my fantasies,
Hmm.
I haven't analyzed that in a long, but when I did, uh it was probably a little higher than 50%. Probably around 0.55 to point 0.6. And what I mean by that is, like, I stick a fantasy based on the higher time frame, and where I reverse engineer my stop, it doesn't hit that.
I see.
So it's a little over half. So it's okay, but really where I make my money is on the RR. It's not, it's not just like being correct on the trade. It's sizing into the trades that I think will work or are working, and cutting the trades that are just they're not acting right, or I just don't believe that they're going to work.
So
And I think that's
so you size in, you put in a small fantasy order, you enter the trade, and then you start watching. And when it gets to the area of interest, and then it forms a front side, a back side, or some kind of a rejection,
hmm
then you still have your fantasy order in, much lower maybe.
right. But sometimes I'll say, you know what, I'm only in with a 0.10, 0.15 fantasy, and I'm like, you know what, I think I'll go to 2.0 or a quarter. Like it's just hanging out. I'm like, it looks okay, so I just add a little bit, then I'll watch it. But what I'm really looking for is some kind of indication pattern on the lower time frame that matches up or agrees with what I saw in the higher time frame.
Hmm.
So it could be a pattern, it could be like a pennant or a triangle or head and shoulders or
which
trend line on the lower time frame, something.
which forms near your very near your line, your resistance line or trend line.
Yes. Yeah, the higher time frame area. Yeah, because then you have like well, not double. You have the lower time frame acting in a way that suggests with technical analysis that the area you identified in advance is actually going to be that turning point, that resistance or support. Um, because just with the fantasy, it's just a guess. Like you're just guessing, like it's going to hit this level and it's going to stop. Well, we know that doesn't always happen. It hits your fantasy and keeps going.
Yeah, it
No.
happens. It happens.
So it's nice when everything matches up. You get the lower time frame acting congruently with the higher time frame.
Okay, so I think my biggest takeaway from this conversation is this, where you enter with a fantasy order as a guess just to be on your radar, and
hmm
then you would watch the chart and wait for it to form some kind of a backside that the lower time frame pattern that you identified, which could be a pennant, a triangle, head and shoulders, or maybe just even a trend line or a support or resistance line. But
Yeah,
once,
there's multiple ways that can happen. I have to see some kind of formation on the
and
lower time frame, and
and
it,
once that,
it it's I it's it. I should also say it's ideal if it's tight. So in other words, if I'm finally confirmed backside, if I'm short,
mhm,
I want and it hits my stop. There still has to be plenty of RR there. Like, you know what I mean? Like it's also how it forms. If it's too wide, like we looked at what was the stock you asked me
yeah,
about?
mRNA,
Oh yeah, mRNA. Like if it's like that, I'm like, it's very wide. You know what I mean? Like the
right?
lower time frames are very wide. It's better if it's tight.
Like
That's
MSTR you had.
right, right. It's tight meaning like even if I enter when it goes backside and it goes down to my higher time frame target, there's still at least 3 to 1 R there. So no problem. I don't have any problem with that. So I think about all these things. You know, and sometimes it's just like my fantasy hits at a level and it just like keeps hitting that level, like it rejecting off that level, or if it's a short. So then I'm like, you know what? I'm like, I'll add right next to this level and I'll throw another whatever fractional R at it until I get to a place where I'm comfortable. And it's just that simple. Like my actual fantasy level never gets violated. I mean, that doesn't usually happen. And sometimes it does happen.
Mhm. Right, every trade is different. There's no same trade happen. Two trades happen the same way. That doesn't really happen.
No, I'm a discretionary trader that operates in a rules-based framework. But not every trade works the same. And really, what it comes down to is we're all just making decisions. So as you get more experience in your technique, you get more experience and your technique gets refined and you get better. I think we just make better decisions. So that's really all I'm trying to do. I'm just trying to make good decisions and keeping my risk in check. So yeah, all these. I mean, basically it's the same. I mean, I'm identifying levels, I'm putting out fantasies, and I'm looking on the lower time frame for some kind of confirmation. But the trades are all different. And the market environment changes. The market conditions change. So the trades are not going to be identical.
Right. No, it makes sense. Now I'm kind of understanding the process of putting the fantasy order out and waiting for it to get to my line, resistance or downtrend
Hmm.
line. And once it's there, then I want to wait for it to show me on the lower time frame, it's respecting that area that I drawn on the higher time frame. And then when
Right.
that's done, then I can say, okay, now I can size it. But
Yep.
but like you said, if it tags that line on the lower
Hmm.
time frame, it goes up there, your fantasy order hits, then it goes down, then it comes back up, tags again the line. The third
Yep.
time comes back up, you want to be adding there because that just keeps tagging it.
Yeah. Yeah. It's like, oh, there's actual resistance here on the lower time frame, which is the same level as my higher time frame. I've had great trades like that. I've gotten really tight risk. I mean, that doesn't happen every day. It's few and far between, but when it does happen, it's a beautiful thing because sometimes you can get really big RR on those trades. I've had trades where I had, you know, 10 to 20 RR. Hasn't happened in a while because of the way the market is, but it does happen.
Yeah, no, that makes sense. Thank you for explaining, especially that part. And Nick did the same thing. He has been, I don't know how he has the patience. I don't know if he's still here, but I don't know how he has, I don't know how he has the patience for me, but much, much appreciated. Because I learned more in the past 2 weeks than I learned in probably the last 12 years that I have been
Oh, good. Yeah, I noticed you've
working
really
at
been
this.
trying to learn this way, so I
I
figured
had my
you must.
own thing going on and I had this strategy that was working and it's great. But when I was entering those trades, it was very, how should I say it? It was very automated. It's rules based, if then scenarios, but it's very automated. And I have done automated trading before years ago with credit spreads on SPX,
Mhm.
and it was working. It was working great until it was not, and then there was an account.
That's I used to spend a lot of time developing systems. They didn't have the word algos when I was doing system trading, and I used to trade, and that's exactly what I found. I think I told you this. It's any system you have will go through periods of working, then not working, working, then not working. They all do that, and it's just because the market dynamics and conditions change.
Hmm.
So if you're just having an automated system, that's what will happen. If I were to do that again, the best scenario I think is to have like three systems that all work in different market conditions, and you kind of diversify your algos, so that it balances everything out. But that is exactly what I concluded after doing that for several years.
Yeah, so that, and I was doing that type of trading for the past few months, and with smaller size, but it was just frustrating because I kept going on tilt every week, and I I just and then I was looking at my trades, and when I had good trades, it was a good trade. But then I think I got too confident, and then I sized up when I shouldn't have. And then looking at your, trades or how you analyze the charts, then I saw well, why am I entering here? Like sometimes because I was only trading 5 stocks with this systematic trading. And when you drew a line on, for example, Apple, and you were going long there, I was going short there. And then,
Oh, wow.
yeah, because that's what the strategy set to do. So I went in and it just didn't make sense. And then the more I was looking at, it was the recaps that you did on the
Hmm.
charts, the more I
Yep.
was looking at those and where you entered, most of the time I was going short there. So, and I just knew that I was doing wrong, and I can see the lines. They're not perfect, but I can see how you draw the lines. I can draw those lines. So I said, why
Yes.
not just try to comprehend and try to understand this kind of way of trading, discretionary, because I never did this before. And
Yeah.
then see how it
Yeah.
goes.
Right. Well, I commend you for trying it because, most people, it's very difficult to change, especially once you learned a certain way. It's to just stop and then try something else completely different. It's not an easy thing to do.
Right, but I had zero, I had zero success in the last 12 years. Um, so I'm really committed to do something and learn something because I know a lot of things, and maybe that was part of the reason why I was kind of my own enemy in a way. Because when I look at the chart, I see a pennant, I see a triangle, but my strategy says to not to enter, but I entered, and then it was just a hot mess. So now that I'm following this, I can kind of put all that knowledge into an actual use, you know,
Yeah, absolutely. Yeah.
because now I'm looking at everything at the same time of, the time of the day and, candlesticks and all that stuff. So it kind of makes sense how I can put everything together now and put it on the chart and go from there. And for the last week, when I started this with just one share, last week, with executions, I think I had great success. And so far this week, I'm following the same concept. And my big celebration is this is the second week in 12 years that I have not gone on tilt.
Wow.
Yeah,
Well, congratulations.
running up to
That's
10
big.
days. It is.
That's
It is.
that's a big deal.
Yeah.
Yeah, no, that's awesome. I'm
Yeah.
happy to hear that.
Yeah. And also, I'm not very good with discipline, but the last 2 weeks, I have not used more size than I don't know, risking, $4 or $5, $6 on my one
Well,
hour trades. Um,
it's
about
it's it sounds like you're becoming a professional trader.
yes, that's the goal. That's the goal. I know it's
And
not
Peter,
much, but to me, it's a big, huge achievement that I'm not walking away Friday 5,000 down, and then next week come back, I'm gonna do great. And then $4,000 loss, and then okay, like we can do this, we can do this. Let's go back again. And then I
Right.
see my
No, that
account slowly dripping away, and then yeah.
well, that's a big deal because I've been there, done that. I was a losing trader for many years until everything, finally everything started coming together. And all those things you said are imperative. Like you have to have rules and you have to have discipline. And you need to control your risk. You have to have risk rules. And when it comes to the charts, like I just believe, I mean, from my own experience, like support, resistance, trends, and patterns, they work. But indicators, lagging indicators for me, they don't work. And even if they do, your RR is not great. Like, your returns are small. So I think that's great news. I think you definitely are saying some things that tell me that you have made an improvement.
Yes, definitely. Thanks to mostly you and Nick, for sure.
and Peter, the if you really want to learn the intricacies of how Scott's trading, I think I mentioned to you that the educational room literally has years worth of Scott's posts and little tips and tricks that I go back and review every single weekend, because there's just so many little gold nuggets in there. So that would be a strong recommendation from me, is to just go back to when he first started posting in there. I think it was back in like 2020, and just go one by one, because those will really shed a lot of light on how he does things.
Right, right, right. Yeah, that's my kind of my new encyclopedia. Yeah, for
What's
sure.
that?
That's kind of like my new Bible.
Oh, good. Yeah,
Yeah,
yeah. It's been mine for the past few years as well. Lots of valuable knowledge in there.
Guys, I gotta go. I'm sorry. I have to take care of something.
No problem,
absolutely.
Scott. Thank you for dropping in. We
Yes,
appreciate
thank you
it.
so much.
Oh, you're welcome. It was nice chatting with you guys, and um, Peter, keep up the good work.
Yes, definitely. Thank you so much.